Hello class, this is a Excel spreadsheet to hopefully illustrate a concept in terms of tax for chapter 1 that is sometimes confusing for those that are new to the tax law. And that's kind of how various taxpayers interact with each other. So there's lots of information in the PowerPoint slides and in the textbook about taxpayers and what the exemptions are and standard deductions, but how do you actually do it in a practical way? How are the things put on the tax return and so forth? So what we have is our example is we have a family, the Campbells, mother and father, okay, Mr. and Mrs. Campbell are married. Their daughter Cindy is 16, lives with them. In addition, they have one of the Campbell's mothers, doesn't matter which one, Harriet, also lives with them. So in this household there are 4 individuals, and we have to look at that in the sense of who's got to file and what tax returns and how that income is reported. So let's start with the Campbells themselves. Their income is $97,000. They have no exempt income. We're following the tax liability formula. So their gross income is $97,000. They have some deductions for AGI. Let's say they made some contributions to their IRA, and so their AGI is $87,000. Now, when it comes time to look at their itemized or standard, remember we take the highest. I'm just going to use, because in chapter 1 we're really only ready to handle a standard deduction, 12,700 for 2017 would be their standard deduction. Neither one of them is over 65, and neither one of them is blind, so they don't get any additional. So that would leave them with 12,700. Now, when we come to the exemptions, now the question is who qualifies as an exemption? Cindy looks like she would qualify exemption. She's under 19. She is a qualifying child in that she doesn't provide more than half of her own support, that sort of thing. So that would be one exemption for Cindy, one for Mr. Campbell, one for Mrs. Campbell. So that would be 3. And then the other one would be potentially Harriet, the mom, who could be a dependent. Now, the key thing is that these exemptions for dependents can only show up once. So there are 4 exemptions here that have to be spread out. If Cindy claimed the exemption, the Campbells could not. It has to be in one or the other. So we have here 3 times 4,050 for the 3, Cindy and the Mr. and Mrs. Campbell. Now, Harriet is another question. Let's consider her for a minute. She has income of $12,000. Of that, some of it is exempt, and therefore her gross income is only $5,300. She has no deduction for AGI, so her AGI is $5,300. Now, for her to be an exemption of the Campbells, then she has to qualify as a dependent. If she qualifies as a dependent, then they would get the exemption and not Harriet. So to determine that, she has to be she's not a qualifying child because she's a parent. She'd have to be a qualifying relative. And remember that a qualifying relative has a threshold for gross income or earned income of $4,050, and her income, gross income, is $5,300. So she does not qualify as a qualified relative. Therefore, she cannot be a dependent of the Campbells. She is a dependent of her only herself, gets to claim that's the exemption of $4,050. Now, if her income here, gross income, ignoring the exempt income, had been less than $4,050, then she could have been an exemption, and then this 4,050 deduction would, instead of being here for Harriet, would be over here for the Campbells. Now, being that she is a dependent of someone else, her standard deduction is the 1,050 plus 1,550 because she's older. We're going to assume that she's over 65 in our example here. And so her standard deduction would be 2,600, her exemption 4,050. Either way, she's going to have no taxable income. So if she would have not been a dependent, say her income would have been lower than the 4,050, and she would then have been qualified as exemption for the Campbells, then her standard deduction would have been 6,350, the normal. So this 1,050 only comes into play if she is the dependent and the exemption is being claimed on somebody else's. Okay? So if that was 1,050 was the case, then the 4,050 would no longer be here. It would be here. And instead of 3, it would be 4. Okay? If that had been the case, if she could not be an exemption for someone else, if she was an exemption for someone else. So that would be how that would work. Now, Cindy is the same thing. Now, notice Harriet still needs to file a return. She's still going to file a return with this income, this AGI, this standard deduction, no exemption. Her taxable income would be, I apologize, there would still be taxable income minus the 2,600 said earlier, and then she'd have to calculate her tax and pay her tax. Notice that her income does not get reported on the Campbell's return, even if she is an exemption for them. Same with Cindy. She has her own return. The Campbells do not add hers in there in this case. She made $3,500. We're going to assume it's all earned. So her standard deduction is the earned income plus 350. So she gets the 3,500 because she got a job, summer job or whatever, and that wipes out, and she has 0 taxable income. No, she does not get an exemption because who's taking that? Campbell's on their return. She still may want to file a return. She doesn't need to because her income is not over what her standard is. But if she had paid in, let's say $50, which is considered a tax credit, her employer had withheld that, she'd want to refile so she could get that refund back. All right? So she has her own tax credit and her own income and would file her own return if she wanted to get that back. Campbell's have theirs where they would take their credits against their tax liability, calculating using the tax table in this case, and Harry would have hers based on her situation. So just because they live in the same house doesn't mean that we fold it all together or anything. They each have individual, the only two people that can fold it together is the Campbells because they are filing jointly. So even if they decided to file separately, then we'd have 4 columns. We'd have each Campbell's, Mr. and Mrs. Campbell filing separately, and they would have to separate them, and they'd each have their own column here. So you see how the individual taxpayers interact with each other and affect each other in terms of how they need to be filed.